Hello and welcome to another session of the My Solo 401k Financial, My Community Daily Webinar Series. We're about to get started. If you have questions or topics you wish to discuss, please chat those over. As always, the presentation is being provided for educational purposes only and should not be construed as tax, legal, or investment advice, nor as a solicitation. When making an investment decision, please consult with your tax attorney professional. If you're on YouTube, please we're in the middle of contribution season. We just had a great deep dive discussion last Friday regarding the rules for making contributions, making solo 401k contributions for a business tax as an S corporation or a C corporation. We've got a lot of great additional content on deck, including the rules for partnerships as well as sole proprietorships. We've got sessions where we're going to talk about how much income you would need in order to be able to maximize contributions. So the magic number, in other words, mega backdoor Roth. So there's a lot of great content. So with that in mind, please chat over questions or topics you want to discuss. We want to keep it educational, of course. As always, let's highlight some of the resources. For example, we have a community where you can post questions 24/7. It's a vibrant community. We've got over 30,000 members. So people are posting questions 24/7. It's a great way to ask a question or see what other people are asking about. Great way to learn, great way to share the knowledge. There's a library of videos and webinars. Of course, we go live twice a day, once at 10 a.m. Pacific, 1 p.m. Eastern, and then we're back for the afternoon session at 1 p.m. Pacific, 4 p.m. Eastern. It's always free to join. All are welcome. So if you subscribe to the new YouTube channel, you'll get notified of when we go live, so you can jump on, ask questions, hear what other people are asking. So we really appreciate the chance to discuss these topics. Now, for today, talking about self-employed 401k, right? So for those that are self-employed, there's not always going to be a lot of great options you might think to be able to save for retirement, right? It's not like you work in corporate America where they already have a 401k for you. But a solo 401k can be available to you. So we'll talk about eligibility. So if you are self-employed with no non-owner, non-spouse, full-time W-2 employees working for you, you can set up a solo 401k. And a solo 401k has tremendous benefits and features that aren't even available for full-time employer plans. In other words, 401k plans that you might have at a day job. So it's a great benefit of being self-employed is you can get access to the solo 401k as long as, again, you don't have any non-owner, non-spouse, full-time W-2 employees working in your business. Now, some of the additional eligibility considerations to see whether you can set up a self-employed 401k are going to be, okay, do I need a separate entity like an LLC or an S Corp? The answer is no. We have many customers who operate as sole proprietors, and that's totally fine. Ultimately, the key is that you're reporting earned self-employment income on your taxes. So what does that mean? Well, it could mean income reported on Schedule C if your business is taxed as a sole proprietorship, maybe a single member LLC where it's a disregarded entity. Ultimately, if you've got that income reported on Schedule C, that's going to be earned self-employment income, as opposed to on Schedule E, where you'd report investment income, like maybe income that you get from a rental property. Another way, though, that's not the only way to report earned self-employment income. If your business is taxed as an S Corp or C Corp, then that's going to be W-2 wages from your S Corp or C Corp. So from your own business, those W-2 wages would constitute earned self-employment income and would allow you to be able to set up a solo 401k as long as, again, you don't have any non-owner, non-spouse, full-time W-2 employees working for any business owned by you or a spouse, if any. And then the third way would be if your business is taxed as a partnership and you get income reported on line 14 of the K-1 from that partnership, that'll constitute earned self-employment income. Now, there's no minimum amount of earned self-employment income that you need to report in order to be eligible. And it's not that solo 401k plans are just for certain businesses that generate a certain amount of income. No, that's not the case. There's no minimum amount of earned self-employment income that you would need to report in order to be eligible. As long as it's legitimate, consistent income that you're reporting on your taxes as earned self-employment income, that's going to qualify. That's going to get you in to be into the room to be able to set up a solo 401k. Now, on top of that, question comes up, okay, can my spouse participate? Can my business partner participate? So as long as your spouse is working in the business and reporting their own earned self-employment income, or as long as it's at least a 3% owner of the business who's reporting his or her earned self-employment income, that individual can also participate. In that case, it's just one plan, one fee that we charge, separate accounts for each participant, and then each participant's going to be able to make contributions based on their income, their age, the other factors, can roll over money, for example, from a former employer plan or a non-Roth IRA to their account, can invest or make contributions however they see fit. Another question that comes up is, okay, I've got a day job somewhere and I even participate in my 401k at my day job, but I'm also separately self-employed, right? With no employees working for my business. Can I set up a solo 401k? The answer is yes. So the fact that you have a day job, the fact that you even participate in your W-2 employer-sponsored plan, your day job 401k plan, would not preclude someone who's otherwise reporting earned self-employment income with no employees working for them from setting up a solo 401k for their side business. And then they can make contributions to both plans. Do I need an EIN for my self-employed business? No, you do not. So there's no requirement to have an EIN for your business in order to set up a solo 401k plan with us. Now, as part of the onboarding process, we do obtain an EIN for the 401k, separate than the EIN that you might have for your business. We do obtain an EIN for the 401k, but you don't need to have an EIN for your business. Again, you could just be a sole proprietor, no formal legal entity, reporting income on Schedule C, no employees working for you, set up a solo 401k. Now, what that gets you is many benefits, right? You have access to the highest contribution limits that are available for any defined contribution plan available for self-employed individuals. That goes into some of the use cases, right? Why would someone set up a solo 401k? So we'll spend a couple minutes on the use cases, then we'll go to the questions. So thank you so much for your patience. Thank you for bringing the questions. If you have more questions, please go ahead and start chatting them up now to make sure we get to all of them. So let's look at it through the lens of different customer profiles. The frugal investor. Setting up our plan will make the self-employed individual eligible to claim tax credits, $1,500 in tax credits, $500 per year for 3 consecutive years. They could have a basic solo 401k plan somewhere else, like at a discount brokerage, like a Fidelity, a Schwab, etc., that they upgrade to our plan. They'll be eligible to claim the tax credits. They may not have a solo 401k, but they're eligible and they set one up. They're eligible to claim the tax credits. Those tax credits are going to more than cover our fees for the first 7 years. What do we charge? We charge $650 as an initial cost. That includes the $525 establishment fee, plus the first $125 annual fee. So initial cost is $650. 12 months later, so for example, January of next year, if someone were to sign up now, our $125 annual fee would be due. That would cover the second year. And that's per plan, even if there's 2 participants. Covers all the ongoing compliance support for the solo 401k. There's no asset under management fees, right? So even if the value of your plan goes up and up as you contribute and make investments, our fees will stay the same. So those tax credits is going to make it super affordable because it's going to cover the cost to set up and maintain the plan for the first 7 years. Another customer profile, the Roth Maximizer. So many of our customers, they want to maximize the funds going into their Roth solo 401k. Our plan is the best for that because it allows for mega backdoor Roth contributions, employer Roth contributions, in-plan Roth conversions, where someone has money that's in a pre-tax account. They want to move it to a Roth status. On top of that, we provide all the ongoing compliance support in terms of how much can I contribute? the 1099-R that would be needed if someone's making mega backdoor Roth contributions or processing in-plan Roth rollovers. Another customer profile, the large account holder. So once the value of the plan exceeds $250,000, including investments, all the different accounts, if there's multiple people participating, you got to look across the whole plan. So all the different accounts and aggregate the value. If it exceeds $250,000, there is an annual informational tax filing requirement. The name of that informational tax filing that is required is called Form 5500 EZ. Now, we handle that as an optional free service. In other words, no additional charge for our customers. Plus, we do it under the electronic filing system just to make it easy for the customers. Next is the alternative investor, who's going to be very attracted to our plan because it not only allows for typical brokerage type investments such as stocks, bonds, mutual funds, but also true alternative investments such as real estate, private placement, crypto, precious metals, notes. Finally, the rainy day investor. So our plan would allow the solo 401k participant to take a loan from their plan, taking the money out of the plan that they can use for any purpose whatsoever, whether it's an emergency or a non-emergency, doesn't matter. It's not going to be subject to taxes or penalties as long as it's documented as a loan. We handle the loan documentation requirement as part of our service for no additional charge. And within the loan terms, what are the loan terms? Well, the individual could borrow up to 50% of the value of their plan, not to exceed $50,000. It needs to be paid back in monthly or quarterly payments, up to you. Equal payments of principal and interest. The interest is prime plus 1% or a CD rate plus 2%. You choose, with the payment spread over a 5-year term. Okay, that's great. So we went through the customer use cases. Now let's go to the questions. So again, you can join us every single day in our community, mysolo401k.net/my community. We go live twice a day. You can find our schedule at mysolo401k.net/webinar. So come and ask questions, hear what other people are asking. I did the mega backdoor Roth last year. Hold up one second. We just want to pull something up here. Thank you for your patience here. Okay, awesome. Okay, so I did the mega backdoor Roth last year. The voluntary after-tax account gained $2 in interest by the time the funds were rolled over into my Roth IRA. How do I report the $2 in my tax return? Should I roll it over into my Roth when I did this year's mega backdoor Roth? Well, if they were transferred to the Roth IRA along with the contribution, the basis, then that's going to be taxable for the year of the transfer. For example, in 2024, we handle the 1099-R that's needed. So if you submitted that information using our online form, then that 1099-R will be issued for 2024, will be provided by the end of February 2025, so here in the coming weeks. And then you would report that as taxable income on your 2024 1040. So you provide that 1099-R. It's going to show the total amount transferred, and that's going to have the taxable amount, $2, and then you add $2 to your income. If I contribute to my after-tax bucket, do I need to immediately move that over to the Roth 401k? Are you aware of any issues doing this at Fidelity? So you certainly can. Most folks do because they don't want any of the gains to accrue inside the after-tax. They'd rather have them accrue inside the Roth, where they're going to be growing on a tax deferred and then be potentially tax-free. In other words, if later when they ultimately withdraw the funds from the Roth solo 401k, they've had the account for at least 5 years and age 59 and a half, then it's a qualified Roth distribution. So the gains will be totally tax-free. There's no issues with doing this at Fidelity. It can be done internally electronically. Fidelity is the top brokerage option for our customers, and we help customers open up the requisite number of accounts. For example, a separate brokerage account for after-tax funds, another account for Roth funds. Those funds can be moved electronically internally from the after-tax account, the brokerage account at Fidelity for after-tax funds, to this other brokerage account at Fidelity for Roth solo 401k funds. And then customers let us know about that transfer to give us the information we need to prepare the 1099-R. So if the information was submitted via the online form, it'll be provided by the end of February. If you haven't done it yet, please do it now so we can get it in the queue. Working for more than one employer. Thank you so much for the great questions and the participation. Next question. Working for more than one employer. Self-employed and work for another employer. Maxed out $69,000 for self-employed solo 401k, which included the $23,000 employee contribution. That was for 2024. And on top of that, external employer 401k was contributed $23,000 employee plus a 3% match. So this would generate W-2 in box 12A with $23,000 on 2 paychecks. Yes, because that does, the employee contribution limit applies at the employee level. So you cannot contribute $23,000 twice because you already hit the max. Now, if you have a plan like ours that allows for voluntary after-tax contributions and you have at least $69,000 of self-employment income, then you can contribute $69,000 as a voluntary after-tax contribution to the solo 401k. You can skip the employee, you can skip the employer. The voluntary after-tax solo 401k contribution limit is not reduced by contributions made to a day job 401k plan. So the employee contributions made to the day job 401k plan, the employer contributions made to the day job 401k plan would not reduce how much you can contribute to the solo 401k as a voluntary after-tax contribution. So assuming, again, you had at least $69,000 of voluntary after-tax or $69,000 of earned self-employment income, you can contribute 100% of that as a voluntary after-tax contribution to the solo 401k. And that wouldn't be reportable on the W-2. So it's when you make a voluntary after-tax solo 401k contribution, it doesn't have to be reported on the W-2 or the employer's return or the employee's return. It's just not reportable. Now, the subsequent transfer from the after-tax account to the Roth solo 401k is reportable for the year of the transfer by the plan on a Form 1099-R. And that's why I was referencing we have the online form that customers use to provide us the information we need to prepare that 1099-R, which again, we handle as an optional free service for our customers. Yes, again, so you can make it as an after-tax, but you can't make it as an employee to the solo 401k because you already hit the limit. In short, do I need to file any forms with Fidelity or my solo 401k if I do contributions to the after-tax and move them over to the Roth bucket? So you just have to move the money at Fidelity. It can be done typically internally electronically. Customers provide us the information about that move because that is reportable by the plan on a 1099-R. Yes, voluntary after-tax contributions can be made for 2024 all the way up until the business tax return deadline, including any timely filed extension. What all forms, documents do I need for tax filing for my S Corp in respect to these solo 401k accounts I've set up through my solo 401k at Fidelity? So the only thing that would be relevant to the S Corp return is if you're making employer contributions that are going to need to be reported on the employer's return. Or if you're making employee contributions, those are reported on the W-2. But if the only contributions that are being made are after-tax contributions, it's not reportable by the plan. It's not reported on the employee or an employer's return. So if you look, for example, at the W-2 instructions, it's clear that making voluntary after-tax contributions can be reported on the W-2 in box 14, but it's optional to report that. Do I need to let Fidelity or my solo 401k that these contributions are for 2024 and not considered towards 2025? No. With respect to Fidelity, they're simply providing the account for a third-party plan, so they don't need to know. With respect to us as the plan provider, we don't need to know about contributions because contributions are not reportable by the plan. It's only that subsequent transfer from the after-tax account to the Roth solo 401k or Roth IRA that has to be reported on the 1099-R. How do I claim the $500 tax credit? I've set up my account in 2024. So let me pull up your email. 1 second, please. We have a deep dive webinar that we hosted with an IRS enrolled agent. And we'll shoot you that email. We'll shoot you a link to that after we're done. regarding the steps. So if the $2 was not rolled over, you can roll over it. You can roll it over now to either a Roth IRA or a Roth solo 401k, in which case it'll be taxable for the year of the transfer, i.e. 2025. So you'd have to submit the online form to provide us the information we need so we can capture that information for the 2025 1099-R. Alternatively, it can be transferred to the pre-tax solo 401k, in which case it'll be tax deferred. It's still reportable, so you still have to let us know about that transfer. But then going forward, it would be tax deferred, and then ultimately when the funds are withdrawn from the pre-tax solo 401k, it'll be taxable like any other funds that you withdraw from a pre-tax solo 401k. So you want to let us know about those transfers at the time of the transaction back in 2024. If you've forgotten to do that, please go ahead and do it now so we can get it in the queue for the 1099-R to be prepared. Yes, we do file it directly with the IRS electronically and provide a courtesy copy to the customer. Thank you so much for the good participation. We'll give it another moment here, so if there's any more questions. Again, please continue to participate 24/7 on the community. You can post questions in the forums. You can come to these webinars. It's free to join. All are welcome. You can always find the schedule at mysolo401k.net/webinar. If you sign up for a webinar, you will be sent the recording. So if you can't even attend the whole thing, you could at least sign up and get a recording link. Okay, I see the next question. We'll turn to that next. I just sent the link to the deep dive webinar to the individual that was asking about that. Thank you so much for your patience. I converted my existing Schwab solo 401k to yours. The balance was already 250, so I did the 5,500 last year. For this year, you'll need the beginning. Yes. Okay, great. We're going to be following up to capture that information. Let me see here. You're going to want to give us a copy of that, of last year's 5,500 EZ. Okay, wonderful. I sent you a link to the online questionnaire you can use to provide us the information we need for the 5,500 EZ. Thank you so much. Take a look at that email when you get a chance. Oh, thank you so much for the positive feedback. No, it's not available. We provide it to customers. So if you, regarding the link for the, just go to mysolo401k.net/forms, and you can find the applicable forms. There's one, for example, for after-tax to Roth solo 401k. There's another for after-tax to Roth IRA. All right, well, please like and subscribe if you're on YouTube so you get the notifications for our next session. Please, or go to mysolo401k.net/webinar. Come to the community, check out the forums, check out the library. No, the employer contributions are not reported on the W-2. They would be reported on the 1120S, for example, or the 1120 if the business is taxed as a C Corp. All right. Until next time, everyone. Take care.